Hi friends, welcome to our YouTube channel eCommerce for the World. Today's topic is, the question is, whether e-commerce sellers are required to file income tax returns. Is it necessary for e-commerce sellers to file ITR or income tax return? Yes, it is mandatory. If you are an Indian citizen and if you are a registered seller, that means if you have taken GST, that is goods and services tax, GST, goods and services tax number, then it is mandatory for the GST holders to file GST returns monthly and also annual tax return or income tax returns annually. It is mandatory. Actually, the rule of the government of India is that if the limit of a salaried individual or a business people is below or less than 2.5 lakhs per year, the net income, then he is supposed to not file ITR. But if he is under GST or if he has registered seller as GST seller, and especially if you are doing e-commerce business, then it is mandatory by the government of India and it is mandatory on the seller, or it is a responsibility of the seller to file annual tax returns, that is income tax returns. And the applicable ITR, there are 7 different types of forms available for filing income tax. There is ITR. ITR is short form for income tax return. ITR 1, 2, 3, 4, 5, 6, 7. So there are 7 forms, ITR forms available. Out of that, the e-commerce sellers are supposed to file either ITR 4 or ITR 3. It is the business people. And if the gross turnover for a particular year, if it is less than 3 crores per year sales of goods, then the e-commerce seller can file the ITR under this particular form, that is ITR 4. If it is less than 3 crores turnover, then ITR 4. And most of the e-commerce seller will fall under this category ITR 4, that is less than 3 crores. And if any of the e-commerce seller exceeds the turnover 3 crores, then ITR 3 has to be filed, right? And ITR 1 and 2 applies to salaried class, right? And there are other ITR forms too, but what is relevant for e-commerce seller is, for persons who are doing e-commerce business, is ITR 4 or in advanced stages ITR 3, right? And each and every form differs from one another. And the financial year starts, even though the year starts from January every year, the financial year starts from 1st April of a particular year to 31 March of the next year, right? So during this 12 months period, say for example, this is the assessment year, that is 2004 to 5 is the assessment year, then the financial year will be the previous year, that is 2003 2003 to 2004, that is 1st April 2000, not 2003, 2023, 1st April 2023 last year to 31st March 2024 this year. So for this period of 12 months we will be filing income tax returns, and the last date to file the income tax return ITR is coming 31st July 2024 is the last date. You can also file later, but with a particular fine, right? So it will be better if you file the income tax return without fine, right, before 31st July 2024, right? And normally particular, say for example, if your turnover, example, every month or overall for a period of 12 months, if an e-commerce seller has sold the product for example 10 lakhs per year, then that means that is the gross turnover, that is the total sales that happened, right? And in that we will be paying for this seller purchases done. Then we will be paying for the GST taxes for goods, right? Then we will be paying for other expenses such as courier, everything, all other expenses met. Then we will get some sort of amount. For example, normally the minimum profit margin or minimum income that has to be shown is 8%. It is a rule, mandatory. Not less than 8% of the total gross turnover must be shown as the total income. That is the net income. Right? That is mandatory. So what we have to do is that it would be better, instead of showing 8% of the total gross turnover, if you show 10%, or even you can show 20%. For example, if you are showing 10%, and if the annual gross turnover is 10 lakhs, then the if it is 10%, then it will be around 1 lakh, right? So that will be out of 10 lakhs, 1% means 10 lakhs, 1 lakh. So okay, 10,000. Okay, so how much will calculate? Okay, particular percentage, you just assume that for a particular 10 lakhs you get some value like 1 lakh, right? So that means there is a limit in that tax limit. Suppose you fall under below 3 lakhs. Actually there are two types of regime available. One is the old tax regime, the other is the new tax regime. In the case of old tax regime, the limit given is up to 2.5 lakhs nil tax, then 2.5 to 5 lakhs 5%, then 5 lakhs to 10 lakh 15%, right? So like that there is a limit to it. Okay, that falls under old tax regime. And there is another tax regime called new tax regime, in which it is categorized based on up to 3 lakhs nil tax, then 3 to 6 lakhs you need to pay 5%, right? Similarly 6 to 9 10%. So like that it goes on, the slab goes on, right? And based on this slab, right, for example your income gross turnover is 10 lakhs per annum, but the net income after subtracting all other expenses comes around 1 lakh, then you no need to pay tax, right? So that is the situation. Just like that, you need to show the accounts and no need to pay any tax, but you need to file the report to the government. So that is what is about ITR return filing, right? And it is mandatory for all e-commerce sellers. And there are a lot many technicalities in it, but this is the basis of or the basics behind income tax returns, especially for e-commerce sellers. So definitely all e-commerce sellers should file income tax returns without fail, right? But how much you show is also given as a, like for example, minimum of not less than 8% of the profit must be mentioned, not profit, net income should be mentioned by the seller, right, with respect to the annual turnover, right? As I said, if the annual turnover is 10 lakhs, then at least 8% must be shown as net income, or 10%. Better you can show 10 or 20% can be shown, right? It depends upon the concerned seller. And this ITR 4 form is based on presumptive taxation. That is, there is no necessary to show the proof to the government of India, but we need to show that this is the income and this is the expense and this is the net income I have received from doing the e-commerce business, right? And based on that, if it exceeds a particular limit, say for example, if the concerned e-commerce seller is under new tax regime, and if the net income exceeds 3 lakh, then he will be paying. After 3 lakhs, how much is the amount? So for example, from 3 to 6 lakhs, it is 5%. So if the e-commerce seller net income exceeds 3.5 lakhs, right? Say for example 3.5 lakhs, then up to 3 lakhs, if he is under new tax regime, up to 3 lakhs no need to pay. So balance 50,000, he will be paying 5%, right? And if he is under old tax regime, then up to and the annual net income is, if the annual net income is 3.5 lakhs, assume, okay, then the e-commerce seller, if he is under old tax regime, up to 2.5 lakhs, he no need to pay. So remaining for 1 lakh, so that is 2.5 to 3.5, so 1 lakh. So for that particular amount only, he need to pay 5% tax. So this is what about ITR 4. And this ITR 4, as a summary, I will tell you, is a ITR income tax form that has to be filled up either online or offline, can be filled up, right? It is easy to fill up online, right? And we need to consider all the factors. Actually, this IT filing and GST filing is entirely different, and this GST filing is nothing but the monthly filing that we do, all GST practitioners do, that we call it as GST filing, right? And as far as GST is concerned, the seller is not paying, right? Actually, the customer or the buyer is paying along with the product price. Okay, so only thing is that the e-commerce seller will be collecting that GST amount from the buyer, and then based on that amount that he collects from, he will be paying to the government, right, as a collector, right, as a tax collector. But in the case of IT, income tax filing, whatever the income that is received by the seller, neglecting all other expenses, right, and based on the gross income, gross sales that he receives, and based on all the deductions, other office expenses, transportation, GST, everything, all other, some amount of money he will be getting from doing business. So for that particular income that a particular e-commerce seller earns, he need to file income tax returns, and if it exceeds the particular limit, then the e-commerce seller will be paying the tax. So that is the concept behind ITR 4, and also any other income tax return forms. Okay, so it is mandatory on the part of the e-commerce seller to file income tax returns, right? Provided he has already registered with GST, and GST is mandatory for all e-commerce sellers. Since interstate transactions takes place within India, and it is mandatory on the part of all e-commerce sellers, he can enter into any e-commerce portal only if there is a GST number. So in order to do that, everyone will have registered himself and he have taken the GST number. So that is all known fact, right? But the thing is that apart from GST filing, that will be done on a monthly basis. This income tax filing should be done on an annual basis. Okay, so this is the major difference between GST and IT, income tax, right? And without fine, July 31st is last date, and after 31st, if you file, right, then there will be a particular fine, right, involved in it. Okay, this is all about income tax filing in e-commerce business. So for the answer to the question is whether e-commerce sellers are required to file income tax is yes, it is mandatory, right? Thank you, friends. Thank you so much for watching. If you are not subscribed to our channel, please subscribe to our channel, e-commerce for the world. Thank you. Bye. Thank you.